Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Coming up on Market to Market, opening one more gate towards price transparency. Bear is turned around at the courthouse door. Getting old racing dogs new homes.
But we're not going to be able to get that done because of the weather.
And market analysis with John Roach next.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, June 24 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Slowing sales of existing homes has failed to keep a lid on prices. The National Association of Realtors said this week sales were off 3.4% for the month of May. The national median home price reached an all-time high of $407,600. The movement of new homes did rise last month by 10.7%, according to the Commerce Department. Both types of buyers are being impacted by the rising mortgage rate. Mortgage buyer Freddie Mac reported the 30-year level ticked up to 5.81%, the highest since November of 2008. The Senate Agriculture Committee announced the full chamber's approval of the Keep Kids Fed Act, and by week's end, the bill was headed to the president's desk. This extends funding for free summer meals and increases the number of students who qualify for free universal lunch this fall. The Agriculture Committee also advanced 2 bills aimed at the livestock industry. John Torpy opens the gate to our coverage.
This week, 2 pieces of legislation aimed at providing a more even playing field in the cattle market made their way through the Senate Agriculture Committee.
The goal of the legislation is to ensure that every segment of the beef supply chain can succeed by ensuring robust price discovery and market transparency.
The pair of bills shared bipartisan support as both sides of the aisle found common ground over cattle market consolidation concerns.
One thing we do agree on is that we've had too much consolidation in the meatpacking industry. It's been bad for consumers and it's been terrible for independent cattlemen.
And I want to make it very clear, I'm concerned with the level of concentration in the packing industry, not to mention the amount of foreign ownership in the industry as well. This is harming cow-calf operations and small feeders. No matter the industry, if you have 3 or 4 companies controlling 80 or more % of any link in the supply chain, problems can arise.
The first bill, the Meat and Poultry Special Investigator Act of 2022, will establish a special position within the Department of Agriculture to investigate and prosecute violations of the Packers and Stockyards Act of 1921. Some committee members believe the legislation is redundant.
Creating a new office to focus on something USDA can already do doesn't seem like the best course of action in my mind.
The second piece of legislation, the Cattle Price Transparency Act of 2022, creates a library of contracts between packers and producers for the USDA. The bill also requires processors to create a 14-day slaughter report, giving producers a method for projecting the needs of packers.
I want to compliment the family farmers, those that have cattle operations and know how bad it is to know if you get a fair price because there's not enough price discovery. And number two, maybe not to, if you get a price, not to be marketing your cattle for another 30 days and feed them $8 corn during that 1 month when they're already fat.
If none, all those in favor say aye. Aye.
Both measures received approval via voice vote and passed out of committee for debate by the full Senate. Passage of the legislation was met with mixed reactions from the cattle industry. The National Farmers Union applauded the passage of the bills, while the National Cattlemen's Beef Association strongly opposed them. For Market to Market, I'm John Torpy.
The Supreme Court ended their 2021 term with decisions and rulings to impact generations, but it was a case of inaction that reverberated in rural America. Here's Peter Tubbs.
This week, the U.S. Supreme Court rejected an appeal by Bayer AG over lawsuits challenging the safety of glyphosate, the primary ingredient in the herbicide Roundup. The German pharmaceutical and life sciences company is facing thousands of legal actions from plaintiffs who claim the chemical carries unlabeled health risks and causes cancer. The company has been struggling with the issue since acquiring Monsanto in 2018. The court specifically kept a $25 million judgment in place from a California lawsuit. With potentially billions in the balance, Bayer, the world's largest seed and agricultural chemical company, has set aside $4.5 billion to pay for future litigation and judgment costs. However, Bayer has recently won 4 trials in state courts over cancer cases brought by glyphosate users. The World Health Organization has classified glyphosate as probably carcinogenic to humans, but the U.S. Environmental Protection Agency has repeatedly ruled glyphosate to be safe, which removes the requirement to place a cancer warning label on the packaging. The company plans to replace glyphosate with other active ingredients for the residential market, but the chemical will still be available for agricultural and commercial uses. For Market to Market, I'm Peter Tubbs.
Chris Stapleton's Maggie's Song limits the number of dry eyes for animal owners. The Run, Maggie, Run line has a higher meaning, but the literal sense of dogs racing also creates an emotional and nostalgic reaction for some. An era ended for Greyhound racing in Iowa this spring. Josh Bittner reports on the future of the animals off the track. It's our cover story.
Greyhound racing hit its final stretch in the Midwest this spring as Dubuque's Iowa Greyhound Park, the state's last remaining track, ended over 35 years of live races. A strong kickoff in the 1980s paved the way for a casino gambling boom, which took the financial lead.
Everything we do from now on is pure profit.
Less than 10 years ago, casinos, local business, and governments parlayed their influence into a deal with the Iowa legislature to phase out millions in state gaming subsidies, which had kept tracks afloat even as dog racing declined nationwide. This year, the well ran dry.
It's a great sport to bring your family and kids up and enjoy watching it, but it just financially, we just can't hold up anymore.
General Manager Brian Carpenter began his career as a teenager leading out racers to the starting box. He's seen other tracks rise and fall and additional forms of gambling peel off market share.
Florida kind of was the dagger in the heart. When Florida closed, there was a lot of tracks for people to be able to run down there. And when you bred, if it didn't run very well at one of the bigger tracks, you could go down to Florida and get your money back.
Carpenter estimates the Dubuque closure will impact local veterinarians, dog food and other suppliers, and over 70 track and kennel workers.
It's going to be hard for a lot of the employees. I have many of them that have been here as long as I've been, 37 some years. And it's something that you work and do, and it's part of your life.
A surge in attendance during the park's waning days made for a bittersweet final run.
6 O's at 6-1.
All of us coming up here and weighing our dogs in, I mean, you know, we put on a good game face, but believe me, it's to look at the dogs because the dogs do love this.
Now retired trainer Vera Raznick says public misconceptions about how dogs are treated have hounded the industry.
I don't think there was enough done to really educate on what Greyhound racing really is. And, you know, a lot of it you just hear bad.
Resnick says Iowa Greyhound Park's 8 kennels are easy to regulate, and she designed conditioning around intensity of schedule and each animal's individuality. But animal rights groups like Grey 2K say Greyhound racetrack conditions are inhumane, and that dogs are subject to a host of potential athletic and career-ending injuries, poor diet, and drugs. The Iowa Racing and Gaming Commission's 2021 annual report revealed of nearly 1,700 greyhounds tested, 8 were positive, mostly for muscle relaxants. By next year, West Virginia will house the only 2 remaining dog tracks in the country. And while congressional action to ban greyhound racing has stalled, a majority of states have already made it illegal.
This is a day that we all knew was coming.
Iowa hasn't taken that step, and in fact just passed House File 2497, which could expand simulcast betting options to more tracks outside the U.S. The Humane Society had requested a veto, but the bill was signed into law mid-June.
Particularly of our concern is in Vietnam and in Tijuana, Mexico, some tracks that have some long history of animal welfare concerns. But this bill that was passed is worded in a way that the commission shall grant simulcasting licenses.
Dubuque ran an abbreviated final season, in part due to a shortage of new dogs as national interest subsides. But breeders like Gary Reichert's are soldiering on and rebuke activists for taking credit for racing's downfall, saying a proliferation of convenient sports gambling options is the biggest culprit.
Every once in a while, there's, in any occupation, there's a person that just doesn't do what they should be doing, and that's the ones they dwell on, and then they lump us all together. They have so much money that people are donating to those groups, and none of it's going to the Greyhounds, nothing.
Reichert's turns out about 50 racers per year and says his pups are raised in sanitary conditions, given ample space, freedom to move about, a solid diet, and plenty of love. For him, it's paid dividends.
They're supposed to be the best dogs in the United States to come there to race, and we won it. They run all day long. They just love to run. Why would I want to abuse my dog when I'm trying to make money off a dog? We love our dogs, and our dogs are almost like our kids and stuff, and
Come here, kid.
these are like family.
Drawing the ire of the greyhound trade in the U.S. is the notion that once canines stop racing, they're euthanized. While extreme trauma or debilitation could lead to such outcomes, Reichert's champions wildly successful adoption programs that find good homes for former racers.
We fell in love with Lucy when we met her the first time. She showed up for a home visit, and we were in the kitchen, and she came around the corner and she had one of my slippers in her mouth. So she said this was hers and that we were going to be her family. So, yeah.
Critics argue greyhound racing creates a population that needs to be rescued. But many who've adopted them and gone on to foster more find the dog's demeanor fits right into domestic life.
Lucy? They're so gentle.
I have had so many of our members come out, want to foster, help transport, and that was a really good feeling, particularly since the Dubuque track was ending.
Jody Phelps is president of Iowa-based Heartland Greyhound Adoption, one of many such groups in over 40 states and Canada endorsed by the National Greyhound Association. Dogs come to Phelps aged 18 months to 5 years old. She works with vets to determine any necessary rehab and tailors a suite of options to mesh with new homes.
They're just great pets to have. We'll still work with the breeders in Iowa that are running another track.
Phelps dismisses euthanization rumors, adding her organization has relocated nearly 4,000 greyhounds, though numbers are dwindling.
We'll be here until the last dog is ready to retire.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market Report.
The adage of up the escalator, down the elevator shaft could apply to any number of commodity markets this week as long positions were vacated. For the week, the nearby wheat contract plummeted $1.11 or 11%, while July corn dropped 34 cents. Crude oil's drop, recession fears, and favorable growing conditions weighed back in the soy complex. The nearby soybean contract fell 91 cents. July meal shed $5.50 per ton. December cotton plunged 2024 or 17%. Over in the dairy parlor, July Class 3 milk futures lost 78 cents. The livestock sector was down. August cattle declined $3.20. August feeders dropped 45 cents and the July lean hog contract fell 7 cents. In the currency markets, the U.S. dollar index dropped by 54 ticks. July crude oil weakened by $1.06 per barrel. COMEX gold lost $5.30 per ounce. And the Goldman Sachs commodity index fell almost 21 points to finish at 733.70. Joining us now to provide some insight, John Roach. Hi, John.
Hi, Paul.
I wish you had a week where you could, smile about some things.
I always hate coming in when the markets are down so sharply. It makes it a little frustrating.
We had a quiz about, there's only one market that we track on this show that was up this week. And that was the euro, if you're paying attention at home. Let's start with wheat. Normally not the most headline-grabbing thing, but we're talking 11% drop. Why?
Well, I think you have to look across all the markets, and there's the same cause for a decline, raising interest rates and the potential of putting the country into some sort of a recession or a worse recession. And so we seem to go back and forth. We cycle from we're worried about inflation to we're worried about recession. And this was the recession week. And with wheat in harvest, you had a double reason then for the price to go down. You were in a bad environment. The water was all going down under all the boats, but you had wheat in harvest. And so putting wheat away in storage doesn't make any sense at these price levels, and so it makes a reason for farmers to sell.
Yeah, even when you're over $9, yeah, that's not a price you normally get, and so you're saying make some sales.
Well, farmers did this week. I mean, we were pretty heavily sold. We came into this harvest season with an idea that we didn't want to store any wheat at all. And so we're pretty heavily sold. And so hopefully the people that follow us didn't have much that they needed to be selling now, but that was what a lot of people did. I wouldn't sell the decline that we have right now. I think that we'll go back to the other side and we'll talk inflation again. And so I'd rather wait until we get back on that side of the story rather than make sales this week.
Well, wheat was the one of the commodities that was not green today on Friday across the board. Corn, soybeans kind of rallied back. This corn market, though, you're having the heat dome is gone. The crop is there. You just did a big tour of all sorts of areas here in the I-states. Is it all because there's a crop out there?
Well, I think it's another situation where we had prices up at a very high level, and we didn't really have a fundamental justification to push on higher. We had a weather change. So last week when we had 95-degree temperatures across Illinois and the wind blowing, that was very worrisome, and we put prices up at a peak. And we generated a sell signal, and then this week when the temperatures started to cool, the prices came back under pressure again. And when we looked at the crop ratings report, the ratings are actually better than normal. So we do have a good crop in the field, but we still have to get through the most critical time of the year, which is directly ahead. And nobody's gotten a general relief. Well, a few. There's some people to the north that have, but most areas have not had the general relief of a 2 or 3 inch rain.
There's also a thought that maybe there's some technical movement here. Is this anything technical driven on corn?
Well, clearly when the trend turns down and you have spec funds holding very large long positions, net long positions, the adage of the market is trend is your friend. And the professional traders that manage those funds certainly got sell signals with almost any program that they're using. They got sell signals. It didn't show up so much on today's commitment to traders report. In corn, we were down about 12,000 contracts in the spec fund category. But you can imagine through the balance of this week, that was as of Tuesday, the balance of the week, they made more sales with this decline.
I think Mitchell in Orange County has been paying attention to a lot of strategy that you've talked about and others have talked about. He's wondering if this is what's going on. His question came in via Facebook. He says, John, was this an end-of-month sell-off or a permanent downtrend?
I think at the moment it's an end-of-the-month sell-off. we won't really know whether it's going to stay down at these kind of price levels until we see what the weather brings. We can make an argument next week that it stays dry and the forecast is dry, and we can talk about very exciting prices, or we can get the general rain that makes the crop come home, and in which case we'll look backwards and say, why were we so optimistic at $8?
Well, are you optimistic right now in soybeans at all?
We have buy signals in soybeans, in wheat, and in corn. And so what we're suggesting to people is that if they've made substantial sales along at the higher price level, this is a place to buy call options to cover the upside risk of the unknown weather and the unknown inflation. And so, no, we're not really sellers here at this lower price. We've had several of these cycles during 22 where we broke down, and particularly since the spring of 22, where we broke down to this price level and rallied all the way back up and then back down again. So this isn't the first time that we've acted like the market's over. It could be, but not until the weather says it's over.
Well, if you extend Mitchell's question a little bit, there's also an underlying theory at the end of June, we're talking acreage. In your driving that you've done this week, did it appear to you that there's more bean acres out there, thus driving that November contract lower?
Well, I think that's maybe part of it, that we got more crop planted, a few more acres of beans because we got delayed on the planting on corn because of wet weather, particularly up north. I don't think we're going to see the amount of prevent plant that we thought we might see. I think farmers got the crop in. But another problem that's happening in soybeans, probably the lead, is that the palm oil market fell apart. I think last week alone, palm oil was down 9%. And see, that's been a big catalyst underneath the soybean oil market as we look at biodiesel increasing. And so when the energies fell, soybeans were an energy that were also impacted. And so the price of soybean oil was the leader to the downside in the soybean complex, and it was following palm oil. So now today we saw crude start to bounce back again, and I'm of the opinion that the crude oil market and the energy market is still very much alive, and so I think we can get some help from that sector, plus the weather.
Plus the weather. Real quick on cotton, I can't ignore a 20% drop. What's going on?
You know, one of the things that happened in coming out of 20, the retailers made decisions on what kind of clothing to have, to stock and so forth, and they made a mistake because they continued with casual clothing when we went back to work, and so they got caught. And I think that what we saw happen is demand slowed at the mill level. And I think it goes all the way back to the retail level. I think people are afraid with a recession. And remember, that's what we talked about this week. And so the market that got hurt the most was one that's the most, I would say, the closest related to consumer demand, cotton. What will people do as energy prices move up? What will they back off on? What will they not buy? And new clothes might fit that category. And I think that's what the mills were afraid of.
Is the consumer buying beef?
Consumer continues to buy beef. That's one market where consumer has a liking for beef, and they have about so much of it, and so that demand is actually held fairly well, even though the prices on live cattle this week were at the highest that they've been, this year. So we're seeing the demand hold together strong enough to be able to hold the price up. And now we have a cattle on feed report that's actually a little bit friendly. We had smaller placements than were anticipated and smaller numbers on feed, not a lot, about a point less, but it's a friendly situation there. The cattle market, though, has been really unusual this week. I mean, we've had the futures falling apart while the cash market's printing new high. And so that's unusual. Basis levels are extremely unusual, that the futures to cash relationship, cash is much stronger than the futures. That's caused people to move cattle out of the feedlot quicker. The temperatures had something to do with that, and the death losses and so forth. And we've got a complete difference in prices between feedlot cattle in the south and feedlot cattle in the north. Big range of difference, and transportation is involved there. So the cattle market's really unusual right now. As I talk to cattle traders that know a lot more than I do, they're all a little bit baffled.
Cash was higher too in the hog market.
Hog market is kind of a steady go, and we're worried about the demand on hogs, or demand on pork. We should have been seeing some late spring demand perk in the market, and it didn't really show up the way people expected. We've got plenty of cold storage inventory, and so we're a little bit concerned that may be where the consumer is balking a little bit and trying to save a few dollars.
Well, I'm going to save a few seconds and say thank you, John. We're going to keep going in a minute, but thanks for the time.
Thank you very much, Paul.
All right, that's John Roach. That's going to do it for our installment of the TV show we call Market to Market. We're going to keep going in Market Plus. Got all sorts of great questions from you right here. You can find Market Plus on our website of markettomarket.org, and all of these resources are free. And here's the thing, we want to hear from you. Our email inbox is always open. Send a note to markettomarket@iowapbs.org, and you can talk directly to us about your story ideas, comments on our program, or just an old hi in an old-fashioned email. Next week, the impact of pending legislation on cattle feedlots. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing. Store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.